All right, let's talk about Vancouver mortgages. We're going to break down everything you need to know for December 2025.
So, are you thinking about buying a place in Vancouver? Or maybe your mortgage is coming up for renewal? If that's you, then you're going to want to stick around for the next few minutes. This is for you. Because, and I'm not exaggerating here, the very next decision you make could save you thousands, and I mean thousands of dollars. We're going to get into exactly what you need to know to make that smart choice. Okay, so Section 1, Vancouver's rate reality. Before we can make that smart choice, we really have to get a handle on just how high the stakes are in this market. Let's dive in.
So let's start with this number, $1.13 million. That's the benchmark price for a home in Metro Vancouver right now. And with a number that big, even the tiniest change in your mortgage rate has a huge impact. You know, it's like a tiny leak on a giant ship. Doesn't seem like a big deal at first, but wow, does it add up fast. And how fast does it add up? Well, look at this, $9,000. That's what a measly 0.25% difference in your rate can cost you over just a 5-year term. Think about what $9,000 is. That's a family vacation, a big chunk of a car, a serious boost to your savings. You get the picture. This is exactly why getting this stuff right is so important.
So, the big question is, what's actually driving these rates? Well, it all comes back to the big picture and the decisions being made by the Bank of Canada.
And check this out. For the upcoming rate announcement on December 10th, the market is pretty much all in on one outcome. Investors are betting with about 87% certainty that the bank is going to hold its key rate steady. It's kind of like everyone at the poker table has seen the same cards and is pushing all their chips to the middle on the same bet. And here's why they're making that bet. This is basically the dashboard the Bank of Canada is looking at. You've got inflation sitting right around its target, but GDP growth is slowing down. Unemployment's holding steady, but there's still all this uncertainty with U.S. trade policy. So what does it all mean? It means all the little warning lights are blinking caution. So they're taking a wait-and-see approach. And that translates to stability for us in the mortgage world. All right, Section 2, the fixed versus variable choice. Now that we've got the lay of the land, let's tackle the big one. The question I get all the time. Should you lock in with a fixed rate or do you roll the dice on variable? Okay, so look at this. For the first time in what feels like forever, the best variable rates are actually dipping below the best fixed rates. Now, yeah, the gap is super narrow, but don't underestimate this. This is a big shift. That tiny little difference completely changes the game, and it makes your choice here way more strategic. So here's the bottom line. There is no one-size-fits-all answer. The right choice is all about you. It really comes down to your personality and your finances. If you're the kind of person who needs predictable payments, who sleeps better at night knowing exactly what's coming out of your account, then fixed is probably your best friend. But if you've got a bit of a buffer, you can handle some fluctuation, and your betting rates might drop in the next couple of years, well, then variable becomes a really powerful tool. It's all about your personal risk tolerance. And that leads us to this, a really interesting third option that a lot of people are choosing right now. You can think of it as the Goldilocks approach, a shorter 3-year fixed term. It's not too long, not too short, it's just right. It gives you that stability you crave right now, but it also gives you the flexibility to renegotiate sooner and maybe catch a better rate in a few years. It's a really smart compromise. Okay, on to Section 3, strategies for your situation. Let's roll up our sleeves here and get really specific. We're going to talk strategy, whether you're renewing your mortgage or you're a first-time buyer trying to break into the market. So if you're up for renewal, you're probably looking at something like this. And yeah, it's a bit of a shock to the system. You signed a 5-year fixed back in 2020 at under 2%, and now you're looking at rates closer to 4%. That jump can really sting, and I know it can be stressful seeing that new potential payment, but don't panic. There are absolutely ways to handle this. And here's how. You are not stuck with that payment shock. The absolute worst thing you can do is just sign the renewal letter your bank sends you without thinking. Don't auto-renew. You've got to start early, you've got to shop around, and you have to be willing to switch lenders. Working with a broker can make this whole process way easier and save you a ton of money. You're in the driver's seat here. Now, what about all you first-time buyers out there? Well, I have some seriously good news for you. Take a look at this number, $120,000. This is a game changer. It's how much a couple can now pull out of their RRSPs completely tax-free to use for a down payment. That is a massive leg up for getting into the market.
And that RRSP withdrawal, the homebuyer's plan, that's just one tool in your toolbox. You've got the new First Home Savings Account, which is amazing. It's like the best parts of an RRSP and a TFSA combined. You can get exemptions on the property transfer tax, which saves you thousands right off the bat. There are tax rebates too. The point is, there is help out there. You just have to know where to look and make sure you're using every single program you qualify for.
And the best part for buyers, the entire market has shifted in your favor. We are officially in what's called a balanced market. Gone are the days of crazy bidding wars and no-condition offers. Think of it this way. The chaotic, frantic energy of a Black Friday sale has been replaced with a calm, leisurely shopping trip. You actually have time to think, you have more options, and most importantly, you have more negotiating power. Okay, Section 4, your next move. So we've covered a lot. We've talked about the market, the rates, your choices, your strategies. So now what? What do you actually do with all this information?
The biggest thing I want you to take away from all this is simple. Things have calmed down. After years on a wild roller coaster, the Vancouver market has finally pulled into the station. The crazy pace is gone. We're in this rare moment of stability and clarity, and honestly, that creates a huge window of opportunity. And that brings us to the final, most important question of all. In this kind of stable market, where a tiny, well-informed decision can save you literally thousands of dollars, knowledge isn't just power, it's cold, hard cash in your pocket. The opportunity is right there in front of you. So the only real question left is, what are you going to do about it?